Welcome to Green Money Watch YouTube channel for March the 22nd. Today we're going to be talking about Tiffany and Company, the luxury jewelry item company, and why we think Tiffany will be decreasing in price down to the levels of 90 down to 80s, 90s to around $80, $85 a share within the next few weeks and the next few months. Now, coming over here, we have Tiffany just reported the Q4 earnings, and they actually beat on the same store sales, but they missed the profits. The American same store sales were up 3%. However, their Japanese stores same store sales were down 8%. And also, another reason why we think that we'll see a decrease in the price, there's a couple different reasons. One is the mainland China stores lost half of the normal selling days, and that's been since January 24th because of the coronavirus. We also know that from different reports, there's a merger that was supposed to, or that was taking place, or some type of previous agreement with the European company Louis Vuitton Hennessy. So LVMH is the ticker symbol for that European company. Now, it was previously reported from multiple reports that I've read that the deal was supposed to center around $135 a share from the agreement. However, from most recent reports that I've read is that LVMH will be buying shares on the open market, which to me just makes a lot of sense. And that makes a lot of sense because in this type of environment, it may be better to buy shares on the open market because you can get it at a cheaper price the way the market's been going over the last few weeks. So it makes a lot of sense. And the second reason, we won't be surprised to see the price push down to about $90, $80 a share before it's totally scooped up by LVMH. And I do believe that there was a previous agreement, not only from the reports, but by even just looking at the chart. Even if I didn't look at any reports, by looking at this chart, anytime you see a chart with something that looks like this, these candles look like this up here, that's telling you something is going on, even without reading the report. A lot of times it just means there's an M&A, which just means there's a merger and acquisition that's happening. And it just gives you an idea, because the price is generally not going to go above that, because it just means that the companies have come to an agreement that this is what the price is going to be. So if you didn't know what the news was and you looked at a chart and you saw this, and you're like, hey, this thing is going to go higher, let me buy some shares, I would hesitate from buying shares until after the merger and acquisition has occurred. This is just if you didn't know what the charts or any technical things look like. But if you see this on a chart, it generally means something is happening or there's some type of agreement. So I do believe there was an agreement. I just haven't found where it's been inked. And now that I'm reading that LVMH is buying on the open market, just makes sense. And I'm looking to see the price being pushed down, like I said previously, between from current levels down to like $90 to maybe even $80, $85 a share. So also, third reason behind why Green Money Watch is bearish on Tiffany and Company is that if we look at the year over year price percentage of where Tiffany is now, it's only down, and I say only down negative 6%, 6.28%. And I'm saying only because when I look at the S&P 500, it's down 29%. The Dow is down 33.5%, and the Russell and the NASDAQ are also down, which aren't mentioned here. So these are just three of the reasons why we think that Tiffany and Company will actually see a decrease in price, especially now with it probably LVMH probably will be buying on the open market. Like I said, it just makes sense. Like I said, from the multiple reports that I've read, that's what I'm seeing. And like I said, it just makes sense. So if you guys are interested in Tiffany, it may be a good idea to, if it bounces, if the price bounces upward, then maybe buy some put options with the expectation of it coming back down in price. The options are somewhat expensive for my taste, and the bid ask spreads are a bit wide. If none of you guys understand any of the terminology that I'm using, Green Money Watch does have a course. If you go into greenmoneywatch.com, there is an online course that was posted about 2 weeks ago, and it starts really from the basics. So don't feel like you have to know a lot about the market, because in that course it starts from the very basic. If you're very green, and the course is in 3 parts, but that's part 1 that's actually digitized right now. So it goes over some of the terminology that I'm actually using. So if you don't understand, but our belief, Green Money Watch, is that Tiffany and Company will see a decrease in price over the next few weeks to few months in this type of environment. So thanks for watching the YouTube channel. Be kind enough to subscribe to the YouTube channel. Check out the greenmoneywatch.com subscription, less than a cup of coffee a week, and get different types of information, high probability trades also. And hopefully you guys will return to the channel. Have a good day. Bye.